What's up, guys? Raymond here with another episode of financial statement analysis videos. This is going to be episode 5 in our series of financial statement analysis for the German industrial stock sector. And we're going to get straight into the key ratios of the stock. If you're new to my financial statement analysis videos, what we do in these videos are we analyze the top 3 financial statements that are relevant to a company, those being the income statement, the balance sheet, and the cash flow statement. And we focus on the key factors of each statement. For example, the dividends of the that is depicted in the cash flow statement, and the total equity that is depicted in the balance sheet, and the net income that is derived from the income statement, and other factors. And we attempt to draw up a picture of how well the company has done financially over the past 3 financial years up to this date, as well as to predict how well the company will do. To what degree of accuracy, that's a different story, but how well the company will do in the short term and long term future, and whether or not the company is a good investment and to what degree. So without further ado, we're going to get into the market cap and other key ratios. So the market cap is the overall price of the stock, of the company. The stock is the individual parts of the company that is sold to shareholders or to the general public, that is available for the general public to purchase. The individual stock price is 41.12 euros. And the overall market cap, which is the share price of 41.12 multiplied by the amount of shares that are available for people to buy, is 3.22 billion euros. So if you wanted to get if you want to get the amount of shares that are available for purchase, you would just divide the market cap, you would just divide the market cap by the share price. So the PE ratio is the overall price to earnings ratio. So that would be the overall price of the stock, which is 41.12 euros, divided by the earnings per share, which we can see is 1.05, and that's 38. I would say that's about 4 times the minimum requirement, or at least the ideal requirement of 10. I always say that a P ratio of 10 is usually indicative of a good price, where the company is at a good price to buy. Of course, other factors need to be taken into account to determine whether stock is a good investment or not, but I'd say just based on a P ratio of 10 is good. If a P ratio is at a level of 38, the company would have to demonstrate other areas of its business that are very, very strong to be able to legitimize a P ratio of 38. So the revenue figure, which is the overall sales of the company in the last financial year, was 2.05 billion euros, which is very, very good. It's not higher than the market cap, which we've seen more often than I would like to say in the past financial statements that we've analyzed. A revenue figure that is higher than the market cap, which the overprice of the company, is definitely not a good factor, or definitely not a good indicator of a company's attractiveness to the broad market. So the dividend yield, which is the amount of cash that the company pays out as part of its from its net profit in the last financial period, was up to this date is 2.52%, which is about half of what we say is the minimum requirement for companies to be classified as dividend stock. So if you're investing in a company purely or mainly to receive dividend payments, the company, I would say, should be paying out a minimum of 5% of its 5% of its net income relative to its stock price to shareholders. So this is definitely not classified as a dividend stock. So the beta level for this company, or for this stock, is 0.17, which is less than, it's about 17% of the market average of 1. So the beta is just the risk level of the company. The volatility of the stock up to this date is 0.17. That is probably the best beta score I've seen in recent financial statement analysis. It's definitely very, very good. It means the company's stock is very, very stable. So we're going to get into the first of the financial statements, which is the income statement. As you can see, the company's revenue, which is the light purple figure, and its net income is quite inconsistent. The company had a very, very large amount of revenue sales in the 2019 financial year, and it managed to almost half, I believe, around half the revenue in the 2020 financial year, and it managed to increase it by a small factor in the 2021 financial year. With regards to net income, which is the purple figure, which is the amount of cash that the company brought in over the minus the revenue figure, was around, I would say, 3% in 2019, and it was a lot less than that in a little bit less than that if you compromise for the revenue decrease in 2020, and the It was a bit more than that in 2021. So the company is definitely not doing amazingly well with regards to net profit. It kind of resembles a retail sector stock. Let's check the balance sheet, which depicts the company's assets compared to its liabilities. So I would definitely say, as I've been saying quite consistently in past videos, that a debt to asset ratio of 50% is quite good. It just kind of manages to do a good job of not overly stimulating potential investors' fear circuits, or deterring investors from investing purely because the company has too much debt to be able to generate enough net income to pay out to shareholders or to reinvest in the company. So the total liabilities is the dark purple figure. As you can see, in the 2019 financial year, it's around 50%. In the 2020 financial year, the company decreased its assets as well as its liabilities, but it decreased its liabilities more so than it decreased the assets, and it managed to get a healthier level of debt to assets. I believe it looks around 40%, which is really good. In the 2021 financial year, which was even better, it managed to increase its total liabilities and it managed to increase its total assets. But the total assets and the total liabilities managed to get to around 40%. I believe it stayed consistent in the 2021 financial year. So it's definitely maintained a healthy level of debt compared to its assets. Let's get into the cash flow statement, which is the last of the financial statements we're going to look at. And we're going to look into more detail into the cash flow statement. The starting line, which is 121 million euros, which is about 10% of its market cap, which is really good. In the 2021 financial year, the cash flow from operating activities, which is the cash generated from day-to-day operations, was 244 million euros, which is really good. The cash flow from investment activities was negative 83.7 million euros, and that was divided up into capital expenditures, which is expanding property, plant, and equipment. As you saw, the total assets increased from 2020 to 2021, and that's probably where it came from. The capital expenditures was increased by 65 million euros, and the other investing cash flows received 18 million euros. The cash flow from financing activities swallowed up 44 million euros, and that was divided up into 29 million euros, which was devoted to financing cash flow by items, and another 14 million euros, or almost 15 million euros, which was given to eliminating debt, which is really good. That's also where the total liabilities had decreased. So the foreign exchange effects, which was almost 2 million euros, which is really good. It was just a representation of the currency, the euro increasing in price or increasing in value in comparison to other currencies. The net change of cash for 2021 was 118 million euros. So that is how much cash the company has, according to the most recent financial statements in its accounts. Let's check the net change of cash change from 2020 to 2021, as well as from 2019 to 2020. So 2020, the company had negative 30 million euros in cash, and the company had a net change of cash of 1.32 million euros in 2019. So the company has definitely had its best year with regards to cash balance on hand in the 2021 financial year. Let's just hope it continues that in the future, and that will definitely hopefully bring more attractiveness to the company from prospective shareholders. Without further ado, I'm going to close this video. Thank you guys for watching. I will see you in the next one, hopefully.